Hello guys, my name is Bilone and today I'm going to show you something that I believe is going to be helpful in your own trading journey. Alright, so that much I do, let's get into it. Assuming that this is a supply zone, an assumption, assuming that this is a supply zone, you've been told that when the market gets into a supply zone, we short. When the market gets into a demand zone, we do what we short. Right? Now this can be a point of interest, it can be a support level, a resistance level, or whatever. But in this case, we are going to use a very scenario. So this one definitely becomes what? A resistance, right? Or a supply zone. But let's see another block, okay, for the smart money concept traders. Now, for most traders, when the market comes into this zone, they don't pay attention to a lot of things. All that they want to see is that the market is in a supply zone and they will just literally put a limit order over here with their stop loss above the supply zone, sometimes just a little bit above the supply zone, or sometimes they just tighten it up like this, okay? And they target whatever that they want to target. Maybe they want to target 1 is to 3, 1 is to 2, or whatever, right? Now this can work, but most of the time it doesn't. Trust me, because I've taken a lot of trades and a lot of them were losses when I was trading smart money concepts. I'll just mark my zone and leave a limit order over there, and the market will come and take the stop loss. Sometimes it just take the stop loss and keep on running, and sometimes it will take the stop loss and move in my direction. And that helps a lot, especially when it takes the stop loss and move in the direction. Some traders will argue that okay, you have to wait for liquidity sweep. They will draw some kind of a liquidity, line over here. Maybe a recent swing point is resting below the supply, so they will use that as liquidity and still leave the limit order over there and short the market. And this works, like I said, sometimes, but most of the time it doesn't. So don't do that. Okay. Yes, you have to wait for some confirmation, like maybe candle rejections or the specific confirmation that I'm going to talk about. And the two confirmations that I'm going to talk to you about are very simple. They are one, the market structure shift, and two, the change of character pattern. Now, this pattern is something that we already know, but how to anticipate them forming on the chart is the most important thing that I will teach you. Once you know that a market structure shift is valid or a change of character is what? Valid. Okay. These are the things that I'm going to show you that I believe is going to be very, 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 very helpful in your own trading journey. So that much I do, let me get into it. Now, before the market comes into the supply zone, first of all, you have to note how the market comes into the supply zone. Okay. You have to note how it comes into the supply zone. It can do so by doing two things. First of all, it can come into the supply zone with single candles like this, or it can come into the supply zone by building what? Market structure, you know, higher highs and higher lows like this. All right. So let's consider the higher highs and higher lows, because single candles like this, you have to move on to the lower time frame to still see the higher highs and higher lows before you be able to what? Take the trade. So everything still will come back to the higher highs and higher lows. So let me just move this one and let's just focus on what one. Now, when the market comes into the supply zone, we don't short immediately. We wait and we verify whether the market actually wants to what? Move lower. So how do we do the verification? This is extremely important. We do the verification by waiting for one, either market structure shift, or two, change of character. What is a change of character for the market structure shift? Let's take it one by one. The change of character first, because that one is the most common. We have to wait for the market to, instead of making a lower low, instead of making a higher low like this and making another higher high. In this case, we don't get a higher high, we get what? A lower low, right? So you can see that it broke the most recent low that is sitting right here. So this is what you call the change of character, right? So you wait for retracement into this range that has been formed, then you can short the market again towards new lows. Maybe you wait for market to trade back into another block, um, resistance level, a fair value gap, breakout block, whatever. Just wait for the market to mitigate something and what we short the market from here. Okay. But for ICC traders, we know that we don't actually pay attention to other blocks, fair value gaps, or whatever. All that we have to consider is that the market has traded below this level, because coming below this level is an indication. Indication that below this level we are what? We are bearish. So we get a correction when the market comes back again, like from here to here. We can short the market, because this we anticipate is going to be the what? The continuation. Right. So this will be the trade for ICC traders, like here, right? Like here. Then this becomes the stop loss. The stop loss, we have to put it the most recent swing high. Then our TP is going to be that 1 is to 2, 1 is to 3, 1 is to 4, based on the overall what market structure. Okay. Now, this is for the change of character pattern. Now, the most important thing is not the formation of this pattern, it is how this pattern is what formed. And I'll go into the chart and give you some examples so that you understand what we are talking about. So let me just remove this thing over here and let's look at the market structure shift. It is the same logic, but a little bit what different. Okay. We just want to see that the market has fooled. So we come into the supply zone and we make a low, right? A higher low. Now, instead of making a higher high, we don't make a higher high. But in this case, we don't also make a lower low. We rather make a what? A lower high. Okay. So it tells you that, okay, the market has shifted, but the market has failed to make a new high. So under normal circumstances, under normal market structure, when you make a lower high, what comes? What comes is what? A lower low. So we anticipate that this market is going to make a lower low from here, right? But if you look at it critically, the market structure shift pattern is just a head and shoulder, right? Because you have a head over here, have you have a shoulder over here, that is the left shoulder. You have the head over here, and we have the right shoulder over here. So you literally have to wait for the market to break the neckline that is sitting on the right shoulder. So literally something like this. You wait for the market to break this low that is sitting right here, and the stop loss goes above this high. Okay, that is just for the market structure shift pattern. So this is basically it, right? But like I said, the most important thing is not about the pattern, it's about knowing how the pattern is formed and when it is likely to move in your direction. Because trust me, there can be a market structure shift like this and the market can still what? Move up. So why is that so? So you need to wait for specific patterns. So you need to look at the probability that the pattern that has formed is literally going to move in our direction. Okay. So let's go into the chart and let's look at some examples. Let me just remove everything that is here. Then we can look at some examples from the what from the chart. All right. So gold is going to be our case study for today. Let me move on to the 4-hour chart and let's first of all look at an example that I saw over here. Okay. Now, before I show you the example or we look at examples, I have to tell you that the market structure shift, if it is to be high probability, it must come after a liquidity sweep. I'm repeating that again. The market structure shift, if it is to be high probability, it must come after a liquidity sweep. Okay, so if I have to write that down for you, I will say the market, sorry about that, the market, okay, market structure shift, or you can say MSS because that's what it's with. The MSS must come after a liquidity sweep, right? So if you don't see the liquidity sweep and a market structure shift is forming, it simply tells you that it might not be high probability. So you stay away from that. Okay. So if you see the liquidity sweep and there's a formation of what MSS or a potential MSS forming, you can anticipate that the probability of that MSS moving our direction is what is high. When I'm talking about liquidity sweep, just focus on liquidity sweeps from previous candles. Okay. Let's look at this thing over here. A clear example is presented itself over here. We have two examples over here. We have this one and we have this one. Okay. So first of all, you have this bullish candle over here. You can see that the previous candle that is sitting right here is bearish. The next candle that came is what's bullish. But this candle took liquidity from the bearish candle. It took liquidity. You can see that it's clear, right? Because it wicked below but couldn't close. It just traded below but couldn't close below, but closed bullish. Right? It means that all the others that are sitting below this bearish candle, those who thought that the market is going to go short after this bearish candle, they are now on the wrong side of the market. Okay, so now after we have closed bullish over here, we can anticipate the next candle to make a market structure shift and what? And move up higher. Okay, so eh, let me also warn you about this. The market structure shift must come from the next candle, the immediate next candle. It must not come from the what? It must not come from the next two consecutive candles, like let's say from this bearish candle. It must come exactly after the what? After the liquidity sweep. Okay, so we are going to look for it on this what candle. So let's move on to the lower time frame. Let's look at how that looks like. So 1 hour time frame, When you are moving to the lower time frame, you want to move to where you can see higher highs and higher lows within the structure that you are trading. So we are just looking at this little area over here. So you have to see higher highs and higher lows within this area. Don't say that for me from the 4 hour, I look at the 1 hour, so I'm not going to move lower again. Don't do that. If you do that, it's lame because you literally have to see the highs and the lows forming over here so that you can anticipate what the next move. Okay. They move to the 30 minutes time frame. Move to the 30 minutes time frame. We are here. Can we see highs and lows over here? Yes. You can see that the market made a low, made a high, made a low, made a high, but I can't see it very well. So let's get a 15-minute time frame for a more clear view. Okay. So now you're on a 15-minute time frame. What do we do? We let's map it out. Okay. Let's map it out. Boom. What did I say? The market structure shift comes after a liquidity sweep. So after a liquidity sweep, there's a potential that the next candle is going to form the market structure shift and we will continue to what move up high. So you can see this an inverted head and shoulder. You have the head over here. You have the left shoulder that is sitting right here. You have the right shoulder over here. So you have the neckline that is sitting right here. So now that we know that okay, this was a liquidity sweep, so the next one might just be a market structure shift. We can anticipate that when the market comes above the neckline, we will long it. So we long the market from here. Our stop loss goes below the low of the what of the right shoulder, and our take profit is just a hard ratio that you like 1:2, or maybe 1:3, maybe 1:5, or maybe 1:20, or maybe 1:100. I don't know if people can take 1:100. I think I've taken 1:70 before on USD CHF, and I didn't take full TP. I think I took partials because the market I closed because the market was moving against me, but it later went massively inside my direction. It took months. But that trade went in my direction for months. If I had stayed in a trade, it would have been, flipping an account of, I think it was $20 back then, an account of $20 to $2,000, right? But I FOMOed out and that hurt me very bad. So this would have been the trade that you should have taken if you were just considering the market structure shift. You see that this time you didn't have a change of character, right? A trend change because if you are coming down like this, you are coming down like this, okay, a change of character would have been something like this. Look at the difference. The difference is very important. You can see the market structure shift for the market structure shift is not able to break the high that is sitting right here. Okay, but a change of character it breaks the high. So from there we can wait for the retracement down here and we can trade. But for the market structure shift, it's not able to break the high, but it creates an opposite swing point that you can anticipate to come and take this one and trade what overall to the direction that you're anticipating. So we have to know the difference. Don't confuse yourself. Now let's look at another example for the market structure shift. And I think the change of character or the trend change is very popular on YouTube. You can get a lot of examples there. But we have to know what we are doing. Okay, I'll show you when it is high probability and when it is not what highly probable. Okay, so let's look at the 4 hour chart again because I saw another example that is sitting right here. Let's look at it if that is going to give us a trend change. Let me remove this thing. So you can see that this bearish candle over here took liquidity. Can you see that? It took liquidity from what? This previous candle. Okay, so if this one is an uptrend, if this one is an uptrend, after the liquidity sweep, you can anticipate that this is going to be just a market structure shift and it can continue what? Lower. All right, so let's just dive inside this and let's I see another clear example here. Let's consider this one. Because this one, I won't consider this one because you see after it, the market just skyrocketed up. Just skyrocketed up. That's one. And just let's focus on this one. So after the liquidity sweep, we said we expect the next candle to what? To form the market structure shift and continue to what? Move in our direction. Okay. So let's just look at it. Let me just mark the end of the liquidity candle. And let's move on to the 1 hour time frame. 1 hour time. All right. So you can see after the market took liquidity from this lows that are sitting right here, after it took liquidity from this low, it actually tried and it tried to do a market structure shift over here. That is why you have to wait for candle closures, right? So if you have taken this one, you would have still been in profit, but it should have been hectic. being in drawdown and anticipating the market not to take your stop loss, but waiting for the market to close with the 4 hour candle and a new one starting would have increased the probability because that it didn't even stay in drawdown. It started was shooting in your direction, right? So the same scenario over here. We have the market moving like this, right? Took liquidity from this low that is sitting right here. Then the market structure shift. Then it starts what moving up. Right, this one looks like it is coming from an uptrend. So let me just move it like this. Everything. So we didn't do any change of character. We didn't do any change of character. It's just the market making a low over here, making a high instead of making a lower low. If you would, but made what a higher low over here, which is the market structure shift after the liquidity sweep, then you can anticipate what the break of the neckline. When you get into a trade from here, our stop loss goes below the low of the what of the trend, sorry, the low of the right shoulder. Then you can target a face RR like 1 is to 2, 1 is to 5, or whatever. Right. For this one, I'm just using as an example, right? But in normal circumstances, you will be in very nice structure where you can just swing it and be looking for structural levels and taking 1 is to 5, 1 is to 10 or whatever. Okay, don't do 1 is to 2. 1 is to 2 is for traders who are gay. I said it. You can tag me anyway. All right, so that is that for this path. Let's look at the trend change, okay, or the change of character. The trend change is much more easier because it is all over YouTube. A lot of people have made videos around it and that kind of stuff. But I'm gonna show you when it is highly probable and when you should stay away from it. So let's look at this scenario. Something like this can happen. Okay, trend change, pullback, and a continuation. And this is the classic. This is the classic what? This is the classic change of character, right? Pay attention because this is very very important. It will save you from a lot of stop losses. But what about this? Is this a change of character? Is this a change of character? Pay attention very Please pay attention very well. This is an internal change of character because what can happen is that the market can do something like this, continue moving up, then mitigate something around this area, then starts moving up again, right? So when you see something like this, it is what it has low probability of working out than when this one is not there, like this one is also bold and structured to this area, and we had this change of character. But if it is just the change of character is just happening within a bunch of consecutive bullish candles, right? Then it is not highly probable. You should just stay away from this kind of what change of character. But if it is happening after the market is bold and market structure like this, right? After the market is bold market structure like this, then it is highly probable. But if it is just single candles moving in the same direction, then please stay out because if you try, you might take a stop loss. Like I showed you over here, most of the time it is just what's moving in the opposite direction. Let's take one, two example, then we call it a session. Okay. Let's look at this example because I believe this one is important. Let's assume that we knew that the market is going to react from this area, though we don't know, it's just an example. If you move up, you see that maybe there's a support level around this area which has been broken, so it's now turning resistance. That is why I didn't come for this other block because that's what most of okay. So we have this trade. Now we have to move to the lower time frame and see how the market structure is faring within this area. We have to see rare highs and rare lows because that is what is going to help us. So we come to the 30 minutes time frame, and as you can see, we see the 30 minutes candles forming the structure. So we made a high over here, made a low over here. Now we made a high. Okay, we made a low, we made a high, now we made a low. Now this is the second scenario that I was talking about. Pay attention because we broke this low that is sitting right here. Now this can be counted as a change of character, but it's just an internal change of character. Don't forget what I drew before. Okay, we move up aggressively, then we do something like this, then we change character around here. So maybe you anticipate a pullback like this and a continuation. But under normal circumstances, if this is a change of character, what about the overall low that is sitting right here? So this, like I said, is the internal change of character, but this one is what? The major change of character. This one is the minor change of character, and this one is the major change of character. If you focus on the minor change of character without mitigating your stop loss aggressively, right, the market might just react from this area and come and take your stop loss and continue moving up. Okay, so if you want to trade a minor change of character, you can trade it though, but make sure that you mitigate your stop loss aggressively before the market reaches the extreme of the overall range that you are trading within. This is extremely important. I don't know how well I should stress this for you to know the gravity, the information that I'm trying to give you. It is very important. So please pay attention to this. The best way to trade this, or the best way to trade when the market is doing internal change of character, is to literally wait. Okay, don't trade the minor change of character. Wait for the market to break the major change of character or cause the major change of character like this. Then you wait for a rate test. Okay, you wait for just a rate test of this level, or a trade into some kind of a zone, demand, supply, or whatever. Right? Then we and short the market from this area to this area. As an ICC trader, me, I'll short the markets around here. At Smart Money Traders, we try to find an area to short the markets over here. Right. Whatever you do, just make sure you don't take a stop loss. That's just the whole story. Okay. All right. So let's go back to the example that we are looking at and let's see something. So you can see that we have the markets made an aggressive move over here. Then within the aggressive move, we made an internal change of structure, sorry, change of character, or a minor change of character. Somebody can short over here, which I wouldn't do because it's risky. We are just at the tip of the what of the we are just at the source of the what of the aggressive move. So if we try to short here, the market might do something like this, still face resistance here and come and take your stop loss, right? Like I explained in the scenario that I just did. Okay, so we have to wait for this major change of character to happen. So you have to wait for this major low to be broken. You have to wait for this major low to be broken. After this major low has been broken, then you wait for what? A red test into the major low. You can see that this one red test didn't come back very well, but that is just the market. It just weighs, I don't know, but it is not perfect, right? Sometimes it's tap inside it, sometimes it will not. Okay. Somebody can talk about this hidden order block that is sitting right here that the market mitigated, but under normal circumstances, you are never going to know exactly where the market is going to what mitigate. You just have to do something to increase your probability of that's what's happening, and that is that. Okay. So this is just an example, and this conforms perfectly with the you know minor change of character and the major change of character. Let's take one more example for a clear change of character that's happened. I think this is also an example of a minor change of character, but this in this case in the opposite direction. That is a bullish case. Okay. I think these things are much more. You see them most of the time on the lower time frame, like minute time frame. Mm-hmm. Yeah, I think this an example that we'll do. You can see that we are moving up over here, right? We're making highs, lower highs, sorry, higher highs, higher low, higher highs, higher low. Then we did the market structure shift over here. You can see that we failed to make a higher high over here, but we made what? A lower high and a continuation of a lower low. So if you saw that there's a market structure shift, you could have anticipated that, okay, let me check if liquidity has been swept so that I'll validate this what market structure shift. But that's not what we are looking at. So let's mark our change of character from here and see the market comes and mitigates the point of support that has now turned into some kind of a resistance. Then you can share the market from here when it faces some kind of sessions. Okay, like this. So for this one, it is was straightforward. You don't have to wait for anything. After the market trades to this level and shows confirmation, you just share the market. The stop loss above the right here be much more safe, or just above the swing high or the zone. Okay, like this, and you can target your 1 is to 5, 1 is to 10, 1 is to 6, or whatever. This one, if you have had a trade for a very long time, that are giving you like 1 is to 11, 1 is to 10. All right. So I think this is going to be it for this video. Sorry about that. This is going to be it for this video. I hope you got value from this video. And don't forget to like and subscribe to the channel to help us grow. If you have any question, any concern or whatsoever, you can just leave it in the comment section and I'll come and help you out if I could. I can, of course. All right. Have a nice day. Bye.